So today's session, it's all about, the whole series is about the power of five. And five is the recurring theme, mastering Forex trading in 5 key steps. And today I am going to be showing you 5 technical reasons, the minimum you need to take a trade and to help you to improve your results. And if you follow the process I'm going to show you today, and there's nothing held back, I will show you exactly what I do and what I look for and what I teach. And you will be able to take this away and help you to become a better trader. That is my goal. I have, as ever, to go through the disclaimer with you. So the disclaimer is the information provided in this webinar is for educational purposes only and should not be construed as financial investment or tax or legal advice. The content presented is based on general information and does not take into account your personal financial situation or individual needs. Before making any financial decisions, we strongly recommend consulting with a qualified financial advisor, tax professional, or legal expert. The presenter, me, an organization hosting Tickmill, make no representations or warranties regarding the accuracy, completeness, or reliability of the information provided. Past performance is not indicative of future results, and all financial decisions involve risks. By participating in this webinar, you acknowledge and agree to these terms. And the final bit is anything that's said today is my opinion and not Tickmill's. So if you watch the TV, they usually can rattle through that in about 10 seconds, but a bit of a mouthful for me to go through. If you are not familiar with who I am, this is my background. Been involved in financial markets for 30 years. I traded stocks through the dot-com boom in the 1990s. Made quite a lot of money at the time. It was a sideline to my main business. And then I gave most of it back because I hung on too long. But that actually stood me in good stead when it came to crypto in 2020 and 21. I managed to hold on to most of the profits, and the folks I was teaching as well did the same. So I traded Forex. I started around 2002. So there's lots of you in here this evening who've just on the start of this journey. And hopefully I can save you 2 years of going around in circles and wasting a lot of money and time and effort. Forex trading, any kind of trading, does not need to be complicated. And I'm going to show you a very simple setup. And over the years, I have used every indicator going. Talked to a guy yesterday who paid a lot of money for a firm in the UK, and he's got a system that's all the bells and whistles and flashing lights. And when this thing turns green and waves at you, it's time to buy. Bullshit. Excuse my language, but baloney. There is no simple automated strategy. If it was, the banks would have bought it and it would have long gone. The way that I'm going to teach you how to do this is from just looking at simplistic setups and then qualifying it by having as many reasons as possible to support the theory. I spent 2 years in the basement. I had emigrated with my kids, wife and young kids, and we'd gone to live in Lanzarote, Canary Islands, for some sun. And a beautiful part of the world. And I spent 2 years in the basement, 8 hours a day trying to do this. And all it did for me was I lost it over $20,000, wasted at least another 10 on shiny toys and fake gurus, and had still got the bad back to prove it now. Good evening, Emmanuel and Samson. So in 2020, I finally got involved in crypto. If I was really smart, I would have listened to a gentleman back in 2015 who tried to get me involved in it. Didn't understand it at the time, even though I'd been in currencies for 15 years, and finally got involved in 2020 and did very well out of that, and got back into crypto again in July, April, June, and then really in July of last year. And we're well up, I think, 180% since just in a year. Caught the gold and silver boom. Started buying gold in 2022. Prior to that, in the real world, I started 3 businesses from scratch and thought I'd retired at 40 and went to live in Lanzarote. And I was singing and playing guitar in a band and living the dream, but there was not enough money in it. And that's why I ended up getting involved in Forex. So very quick resume for me. If you stay to the end of this session, by the time we're finished, I'll give you a link to sign up to a free training course. And those of you who wish to come along tomorrow is a live training session, usually reserved for members of my Forex Mentor Pro group. And it's also the session where I'm trying to look through my tea leaves and work out my crystal ball, try to work out what I think is going to happen for the year ahead. Last year, I was focusing particularly on crypto and gold and uranium stocks as well as Forex, and did well from that. So tomorrow I've got to try and repeat that and plan and plot what's going to happen. Very tricky to do it straight away because of Trump obviously coming in on the 20th, which nobody knows what he's actually going to do as yet. But if you would like to come along to the session, I will give you a link at the end of this session, and you'll be able to come to that meeting tomorrow. And once again, you'll be able to ask questions. And with that one, I will be able to get you a link very quickly, or you to be able to watch the replay. So today, as before, we will be here for approximately an hour. Can go on longer at the end if there are lots of questions, but let's see how we get on. And then Ashley tonight cannot be with us. As explained, he quit his job in 2022. Good job he had with a big American company, but they abused him during COVID, and he quit and came to work trading Forex full time and working with us. And he now teaches folks as well. And then Phil, this is Phil, and this is, if you are at the stage where you are struggling and you can't seem to get this right, then take comfort from this. Phil joined us in 2021, another young guy from the USA. He had quit his job to trade, and he was doing very badly. Oh, he's not doing very badly, but he was doing badly. He'd quit his job. He spent 6 months trying to do this on his own, and this was his performance at the time that he came and joined me for some private coaching. So not going well, going down, not massively into drawdown, but 12.8 clearly is not good. He'd quit his job. He wasn't making any money. Notice here that in July of 13, June, July, he'd started to kind of stop the rot a little bit. The encouraging thing is, from what I'm going to show you today, is exactly what I've shown Ashley, and I've shown Phil and everybody else that I teach, and everybody else that is a member of Forex Mentor Pro. That is his performance from the July. So I've just shown you where he was when he came to see me, and I'm showing you where he was by the end of the year. So what I'm going to show you tonight, you can do this as well. And the most amazing thing of what Phil did here, look at the drawdown. The drawdown was below 1%. So anybody that's trying to pass a challenge at the moment knows how difficult it is in trying not to go too far into the drawdown. This was an amazing performance. Now you might say, well, it's only 17%. Well, he was 17% down, and he was 12% down, and it's twice as hard to get back from minus to zero and then to get into profit. But the goal of this is to be doing this on a big account. If you only have a few $100s, even if you've got a few $1,000s, you are not going to make enough profit to be able to quit your job and tell your boss to stick it, because you just simply not got a big enough account, and you will take too much risk and it will end in tears. So the good news is this is doable. What you need to do is focus on the things that I'm going to teach you next. Can somebody just confirm to me that the sound is okay and you can see my screen clearly? You should be able to see Phil's sheet. Everything is good, says Elijah. Right, just let me grab a sip of my tea. Although I've lived in Europe I lived in Spain for nearly 20 years, and I'm now in Portugal, still very English when it comes to drinking tea, at least 10 cups a day. Brad says the sound and audio is great. Great. Very well done. Thank you. As does David. And Benjamin says, is it possible to see streams later? I would love to watch an uploaded video and I can't participate live. The idea is Tickmill are supposed to be putting replays out. I don't know if they've done it yet, but they haven't sent me any. But if you go onto our YouTube channel, Benjamin, there's lots of stuff on there, and hopefully they will get this sorted and get these out to people. Okay, so I'm going to get rid of that. And then if I've got everything set up properly without young Ashley. So Benjamin was saying that he's at stage 6.5, he thinks. And I showed this to folks last time. This is the 5 phases of the Forex trader. You'll find this on the free blog on our website. So it's Forex Mentor Pro blog, 5 phases of Forex trader. I just realized half an hour ago that all the images are broken today, just for my benefit here. But this is the journey I find I went on and most people go on. So you should be able to identify where you are. So stick in the chat box as I just read these out to me. Tell me where you're at, whether you're at stage 1, 2, 3, 4, or 5. Stage 1 is you don't know what you're doing. You've seen lots of adverts and people on YouTube claiming that you can make a fortune on this and get rich very quickly. That is stage 1. So you don't know what you're doing. You think this looks great. You throw some money in an account and you promptly lose it. Did it ring a bell for anybody? Because it certainly did to me. Second phase is conscious incompetence. Now you realize actually there is a lot more to this, and you set about buying lots of systems and ebooks, and you test out automated systems on MetaTrader. You buy signals, you get on forums and live chat rooms. You'll be like a teenager. Everything's great and it's so important and makes so exciting. And this could go on for a while. And most people quit at this point as well. There used to be a saying in this business that 90-90-90 rule, 90% of people would lose 90% of their money in the first 90 days trading. So be warned, if you're going to do this, do not waste your real money on putting it into an account until you know what you're doing. Now, Benjamin, by the sound of it, it says he's around 6.5. So 6.5 is the stage that most people get to after a few years, if they go down the traditional route. And hopefully by the time you finish with this session today, I will have saved you 2 years of your life. And the older you get, you realize that's the most important thing. Stage 3 is you start to realize that with just a few EMAs and understanding structure, that you can actually do this without having to listen to anybody else, without having to be in a forum and all the excitement, and without having to spend 8 hours a day sat there. So this is a big key moment. The problem with stage 3 is it often gets to a point where people are not losing, but they're not really winning, or they're not winning enough to justify the amount of time they're spending at this. And I had a guy years ago who told me at the end of the summer, his son, who was working at McDonald's for his summer break from university, was basically earning more per hour than he was doing this. So stage 3 is a tricky stage. It can go on forever. Hopefully from today, we're going to get you through that. The fourth phase is you finally realize and you start to make money, and it's not that difficult, and you don't need to listen to all the gurus and the nonsense on YouTube and all the rest of it, and you can actually do this yourself. Stage 5 is it's actually quite easy. The downside with stage 5, it gets boring. And I get asked, you know, if you're so good at this, why do you bother teaching people? Well, now I'm semi-retired anyway, but I started teaching people back in 2008. I was posting tips and ideas on Twitter. And in the early days of Twitter, people were just generally trying to help one another. It was quite a nice atmosphere on there. And people started to say, well, this guy seems to know what he's talking about. Will you teach me? And teaching was good for me because I like teaching anyway. I taught football sala to kids in Spain. I was a coach there for 20 years. And I enjoy helping people. But on top of which, it was distracting me from doing silly things when I was bored when it came to trading. So this is the stage you get to. Now, the other thing for me is by 2020, I was getting completely bored with it all. And then when I discovered crypto, it re-energized me. And now I also trade or invest, use all the skills I'm going to show you today. I actually use them for crypto and I use them for stocks as well. So, you know, we all want to keep learning all the time and keep ourselves mentally active. Samson says he's at stage 2. Well, good luck, Samson. I hope we'll get you through to the next one. DeWald says phase 3 and Andreas says phase 2 as well. Okay, right. Let's crack on and let's show you now what you need to do. Now, this is inside my members website. You don't need to join. There's lots of stuff from us on YouTube and there's lots of free stuff in the blog, the external blog as well. But what we do is on a Sunday, I and some alternate weeks, Tien is one of the other guys I taught, or Ashley, who I previously taught, and Pierre is another guy. Pierre joined us in 2008. He's been trading full-time since 2010. We share our analysis for the week ahead, explaining what we're looking to trade and why. And I was explaining this week that things should start to get better, but traditionally it's the 20th of January after Martin Luther King Day when all the big traders are back. And obviously with Trump coming in as well, that's going to be a mega important few days. as we try to analyze what he's going to do. And then I explain what I'm looking for the week ahead. And just take a note of these two levels because I'm going to show you these in a little while. So an A grade trade for me is one that has at least 5 reasons to take the trade. I need multiple reasons to take the trade, and that's what I'm going to show you. And so I talked on Sunday about I would take the Aussie dollar yen at 98.65, and I would also take the euro pound short at the big area that would be 83.10 today as well as. So remember that for when we come back. And then in here, in previous sessions, I went through with you and I explained the importance of having a business plan. I talked about trading as a business and not a hobby. And so if you treat it like a business, you have some rules and you have a life plan, then you give yourself a far better chance of success. David is with us tonight. This is David's journey, and this is downloadable for folks. Let me put this in the chat box for anybody who didn't get this last time. David is an English gentleman. He joined us in his 50s 10 years ago, and he wanted to be retired by now and fully and trading for a living. And like most people, he was busy with life. He didn't stick to the rules and the things that we teach, and unfortunately, he failed. But he was a lifetime member with us. He joined 10 years ago, so he came back to us last year, and he said, this time I am going to do this properly. And so this case study that you can download from the link I've just put in goes through the steps you should do and you need to do to prepare yourself before you go anywhere near a chart that we're going to show you soon. For those of you who are members, you can see the full journey of David in starting over, and he's also just started posting another post joining the dots for the more advanced amongst you, because he's now going to start working with Ashley privately. So this is David's story, step by step, for those of you who are members. Then this is the external blog. So, you know, if we're talking about, I'm telling you that this is all great and how this works and the benefits. I've shown you young Phil's performance. There's another one in the blog you can see now. This is Ben. Ben joined me last year, and he's just given us a nice testimonial and gone through a video chat. Ben is a deep sea diver. He works at the bottom of the sea, and he is down there for a month at a time, and they have helium, I think it is, in the oxygen supply. And he sends me texts and messages because he's trying to trade from the bottom of the sea, and he sounds like, hey Mark, I'm here, this is Ben, which is really funny because he's such a big guy. But Ben, great guy. He came to us last year. He'd been trying for 10 years. And when he joined us, he had 9 losing trades out of 10. And he's just had a mega year. In stocks and crypto, he's up significantly, and he's passed challenges as well as. And then another thing that I do is I use the same things I'm going to show you again, and I'll show you it tonight, for stocks. So this is a young lady who's never really made any money in stocks before. She sent me this. I posted it on Twitter in November, and she invested more. Well, she invested more than $200, but in November the 21st, I said to folks, look, I'm taking profits on this stock. This is a Bitcoin related stock, MicroStrategy. And she had invested $204. She bought 4.19 stocks on the 26th of January last year. And by the 21st of November, she was up $2,000. And that was 1,000% on a stock that she never made any money on stocks before, with what I'm going to teach her. And similarly, this was my thinking with crypto for this year. I explained why I thought crypto would be red hot again as well as. So let's get on to the charts, and I'm going to share with you now a system. Where's this gone? Not that one. Okay, can you see MetaTrader? Can somebody just tell me you can see my MetaTrader? Yes, you can. Thank you very much. Okay, so the minimum 5 technical reasons to take a trade. And one of the things that it says on here is looking at the bigger picture helps you with all strategies. So for somebody like Benjamin, if you've got a strategy that's currently working for you, but you need to tweak it to get better, you will find if you look at the bigger picture, you will often be able to avoid losing trades, and it can give you confidence to support the theory for a winning trade. And I've put a band in here. And for example, this at the top here would clearly not have been a good place to buy the US dollar against the Swiss franc. And the reason why it wouldn't have been a good idea is if we scroll back to the left, we can see that in 2019, this was a massive area for months of previous major resistance, and price previously rejected there. Now in 2016, it did get through and then it came back down, and then it was resistance again from 2017 to 2019. So what you're thinking all the time, always be looking to the left. But the obvious thing is if you were going to scalp something on a 5-minute chart in this area here, the probability of that trade winning is not great. So by looking at the big picture, you can actually help yourself to reduce losing trades. And similarly, this is the dollar Swissy. So the dollar Swissy, I have highlighted this area here. If you had decided to buy the dollar Swissy back in 2021, then you could have used this area as an additional reason to support your theory, because clearly for months, this was a big area of support. And when price went on a run, rejected where it previously rejected and came back down again, where did it reject again and bounce? Support, because it's the same as before. And when you're trading technically, that's what we're doing all the time. We are looking for where price previously reacted, and therefore the probability is greater that it will do so again than not. And so if you've been fortunate enough to short this way up here and you're hundreds of pips in profit down here, you have to start thinking, well, where should I get out? Because the probability of it bouncing here was greater than not. And then support breaks. And when support breaks, as you know, it comes back to retest. It is resistance. Yes, it was messy here, but this has been a massive area going back 4 years. So the other day, when price started to come up here again on this pair, I was saying to folks, well, A, this would be a target area for the long from down here, but B, you wouldn't want to be taking a long here because the probability, you've got the trend line against you, weekly trend line going back last year, you've got the monthly 55 EMA, you've got the weekly 200 EMA, and a major area of previous support and resistance, and it was also a whole number. And a lot of pairs have reacted, in the last couple of years especially, have rejected at the whole numbers. And this pair, the dollar Swissy, tends to do it rather a lot. So can you see the benefit of understanding, looking at the big picture, scrolling back and having a look at what happened before? Because that is what happens with we as humans and automated systems. When something sets off, well, where's it going to stop? Where, if we bought down here and we're making a lot of money because we're all the way up here, so now we're up 600 pips, 700 pips, woohoo, order the yacht. Well, hang on a minute. Last time it got up here, on numerous occasions, it promptly dropped all the way back down again. Okay? Yeah, so lots of people saying yes, so you can understand the logic and the reasoning of that. So what I do every week, I start on the weekly charts, and then go down to the daily. And on the weekly, and this is another area here, for example. So if you were thinking of shorting this down here, you wouldn't have shorted this back end of last year here. Why? Well, last time it came down here, and I class this as a fingers in the fire move. The candlestick came down on a weekly, touched an area here, and promptly went back up 1,000 pips. So the likelihood, the probability of it doing again is greater than not. Now, when we look at weekly charts, we're looking at structure and we're looking for clues. And what I mean by that is we are looking to see whether it's going up or down or sideways. So this is not complicated. This is just, is it going up? We want to buy. Is it going down? We want to sell. And if it's going in a range like this, we need to trade it separately as a range trade. And so at the moment, clearly, price is in an uptrend on the dollar Swiss franc. And I just explained to you, I wouldn't be buying at the top, and I wouldn't be selling at the top either, personally, because I don't have the 5 reasons. We're going to cover that in a second. So I start every week, and I recommend that you install this. You can have it on TradingView or you can have it on MetaTrader. This is the dollar index. This is US dollar against 6 other currencies. The predominant one, I think it's 50% nowadays, is the euro, and it gives us a clue as to what we're going to do on a week-by-week basis. And again, we are looking at the dollar index. The dollar, since September, October, has clearly been going up. So as it's going up, we only want to buy. And it's done what all markets do. It goes up, it pulls back, it goes up, it pulls back, goes up, pulls back. You get the picture. So we are trying to wait for a breakout and then a pullback. And this was one of the really good ones that we had last year. And then when it sets off again, I'm always, as I've just shown you, looking to the left. So when this thing set off the other month, well, where's it going to stop? And so what you have to start doing is say, well, okay, hang on, it stopped there last time. And remember, this is weekly. So that week, it stopped to the pip and rejected. Then it got through and it sat on it. Then it got through, then it was messy, then it was off again. This was some inflation news in America on the day. It was, I can't remember exactly what went on. So that was extraordinary. But as prices come back up to this level again, that was clearly an area to expect it was probably going to reject, or at the very least slow down. And once again, this was a whole number of 109 in the area, and this thing tends to stop at the whole numbers. And last time, I can't see without my glasses, I stopped at 108.86. So that area there is obviously an area that we think it's going to struggle. Can anybody tell me, not meant to prologue, can you see another clue on this chart that price perhaps was going to turn back down again? Well, all right, my guys can mention it as well. What was the clues I was talking about last week that price on the dollar may well be running out of steam for a while? Elijah says yes, he knows the answer, but he's not going to say that, and I do it as well. Right, what we have on here, it's not as noticeable now, but this was happening last week. This is what's known as MACD divergence. And what that means is, as the price here of the commodity, whether this be a stock or a crypto or anything else, the high here is a lot higher than the high there. And on here, a few days ago, this was down here. So the lower high here and the higher high there. And I'll show you some examples, better examples than this. But it was a clue that the dollar might be about to turn down. Now here on the daily for the dollar index, it's much clearer. So can you see here, the high here is lower than the high there. And yet here, it's clearly much higher. So this was a clue, and I started to talk about this a week ago, that we could well be going to see at least a pullback on the dollar. If we get the pullback, just as I've shown you at the top, for a pullback, I start to look for the left again and say, well, hang on, if this pulls back down again, where's it probably going to react? And here, 107, 107.13 is a major area of interest. And if I stick a Fibonacci on it, that also happens to coincide with 78.6 fib just below it, in an uptrend, 55 EMA coming up behind it as well. So my thinking is it will probably bounce there. So how do I use that knowledge to trade? And these are the checklist. And I recommend that all of you write out or type out a checklist and keep it at the side of you when you're trading. If you're really, really computer literate, then you're allowed to do this on a spreadsheet. But the whole point of this is that before you take a trade, you need to have a minimum of 5 reasons to take it. And the main thing I was explaining to you, we're all trading probability all the time. If this thing drops, where's it probably going to react? And if the probability is greater in our favor, that gives us our edge. Now, this particular trade has 7 or 8 reasons for me to believe that if it drops, it's probably going to bounce. So if you look at the list that we've got here, shout out to me, stick it in the chat box. What can you see in here as clues to support the theory that price is probably going to react there. And why would that be a very good place to buy the dollar Swissy? Hi, Sheikh. This is supposed to be being recorded by Tickmill, but we're waiting for them to put the recordings out. Tomorrow, I'm going to put a link up at the end of this session where you can come along to Forex Mentor Pro, our live training session, which is normally just for members. But you can come along tomorrow and we'll go over some of this stuff as well tomorrow. And that one will be recorded as well, so you'll be able to see that. So Sammy says, whole number, excellent, well done. Fib, yes. Trend line, so Sammy's found 3. And as Elijah says, you have the weekly 55, the daily 55, the daily 200 is moving up and crossing, so that's good. In the fib zone, whole number, previous support and resistance to the left. Yep, 55 EMA says DeWalt trend line. So, as Sammy says, here you have, what did Sammy say? The whole number. Remember, I said earlier, the dollar Swissy tends to stop at the whole numbers. Now, here, it could well be that it doesn't stop at the whole number. That's not the point. The point is I also need somewhere to hide the stop. So what we've got here, we need to put, and this is a little bit more complicated. It was easy last week. What I would probably do with this is split the order in 2, and I'd put one part of the trade here with the stop down here, which is 70 pips, which is the most I want to go. And I would put the other half here with a stop of about 45. But the reasons within the checklist are as follows. I have the weekly 55 EMA, number 1. Number 2, I have the daily 55 EMA, which has crossed the 200, very bullish cross, and it's also crossed the 55. I have the trend line to hide my stop behind. I have the 78.6 fib to hide my stop behind. I have the whole number to hide my stop behind. I have the 200 EMA to hide my stop behind. So I can't remember how many I've got to there. And then on top of that, I am going to be risking with this one here 40 pips for a potential overall 240 pips. So a 1-to-6 risk reward ratio. You only need a few of them in a month to be a profitable trader. So that is multiple reasons. And that, remember, I started on the dollar index. If the dollar's going to bounce anywhere, then I will be looking on there as well. And even with this one, you could even use the euro. This is the euro USD. The euro USD moves in the opposite direction to the dollar Swissy over 90% of the time. So you don't trade the euro dollar and the dollar Swissy at the same time because it is the same bet. The only time you would take both, and it really is pointless, you would have to half the risk on both of them. So for the euro to come back up to here, 300 pips away, we have the 55 EMA, and we can add a trend line in here. And again, what you're trying to do all the time is build a picture to support the theory or to negate the theory. So here I have got the trend line. We're clearly in a downtrend. I have horizontal support and resistance and the whole number. So that's 3 reasons. And I have the 55 EMA, which is 4 reasons. And if I fib the most recent move, I also have the 78.6 fib. So everything's going on in here. I would be more inclined, if I was going to take it, to put the entry in here and put the stop above there, risking 50 for a potential 1-to-7 risk reward ratio. But that is not as attractive to me as that is because I have more reasons. Does that make sense? And also, as Musa said, this was a pullback in a clear uptrend as well. So all this one is about as good as you can get. It is not to say that that means this is guaranteed to win. And this is something that people have an issue with. And they say accountants particularly struggle with this concept because if you're an accountant, every time you add 2 + 2, it equals 4. Obviously, with trading, this could fail. But I would take this setup every single time because of the fact I have 8 reasons to suspect that if it's going to bounce anywhere, it's probably going to bounce there. Now, when you write your checklist out, you have all of these things. You need to tick off at least 5. Each EMA counts as one in its own right, so that's 3 of them. But you also have to think on what if it goes wrong. And my mentor, Rich Friesen, 20 years ago, I used to feel so silly. He's quite an extrovert, as Richard. I used to have to wear a red hat and a blue hat. And if I was going to buy, I'd put the blue hat on and I would give all the reasons for the buy. And if I was going to sell in the same place, because think on, I'm doing this because this is my strategy and this works for me. At the very same place, there will be as many people or many people who will be selling in the same place. So you have to think, well, what could go wrong? One of the things that could go wrong is the news. And anything that's opposite to any of these, as I've said in here. So if Fibonacci is not in your favor or correlation or MACD, whatever, but the big event that can screw with the trade is the news. And as we know, scheduled news that you can find on Forex Factory, if there was news coming out and this starts up here, I would let it run through the news because that will be 100 pips away, which is 60 odd pips, the average range. But if price is down anywhere nearer, I would wait until the news comes out. But the checklist is positive and negative. Oh, here, Benjamin says, can I explain exactly where I would go long? I would go long here, 88.40, but I'm mindful of this 55 EMA. And these EMAs, you know, people say, well, why do you use EMAs? Well, look, that one there on stop to the pip at the 55. Here, it's stopped at the 200 to the pip for 2 days in a row. So what I find is that price will often bounce off the fib, off the EMA. So unfortunately, now when this was down here, that was perfect. Now I might have to put half of the trade on here, 88.65, and then the other part here. But that, for multiple reasons, is why I would take that trade. The euro, again, you start the week. I start the week with a weekly chart setup and a daily chart setup. So here with the euro, clearly back in 2021, all we wanted to do was sell the thing because it was in a clear downtrend. Then it's been in a range. And if we were buying in here, we'd definitely be wanting to get out. And again, why do I use the 200 EMA? On a weekly, twice it rejected to the pip in that area. Again, 3 times, 4 times, 5, 6 times. Yes, it went through, but then it became support. So out of all the EMAs I've used in the last 20 years, these are the 2 I find to be the most accurate. And therefore, that's what I do. So the pound at the moment, again, is in a clear downtrend. And the area of interest for me with the pound is back up here, but the stop would be too big. I don't want to trade anything with a stop bigger than 70 pips maximum. So again, the dollar Swissy is still the more interesting. Now this is the euro pound, and I need to remember to show you. I have taken this on my live account today, and I've also taken it on the demo account I use for teaching. This ticked all the boxes. So this is the euro pound. It's clearly in a downtrend. We have major previous support and resistance going on. It's the whole number. Again, this tends to stop at the whole numbers. It's the 55 EMA in a clear downtrend. And I'll show you in a moment on the other account. I had the entry in here, and initially I had the stop 25 pips away. It has the potential to make 3 times the risk and possibly go further. So I have 5 or 6 reasons to support the theory. Now that this trade for me, let me do this now, while we're here. Oh, well, actually, let me show also the Aussie yen. Remember, when I showed you earlier, the 2 that I'd said to members on Sunday that I really fancied, this was the other one, the Aussie yen. So the Aussie yen, out of all the yens, it's probably struggling for 5 reasons here. But again, if we put the trend line in, we have the trend line intersecting with the 55 weekly, daily 55, 200 above, and I had the entry in here today. Initially, I think I had the stop in here. Oh, above the whole number. So 75 pip stop, maximum I'm willing to go. It's now only maybe 20 pips in profit. I have now moved the stop. Let me show you this on the other account. So this is that euro pound. And this is the point I was making earlier. You don't sit and watch this all day. I place the orders on a Sunday night or a Monday morning and I walk away. We do have a cool piece of software that we use that will manage the trades for you as well as. But this here is that euro pound. So initially I had the stop 25 pips away. So I was above the trend line, above the 55, above the whole number, above the previous support and resistance and above the fib level, but I also went above the recent spike high here. So I was risking 23. My thinking is it should make at least 50, possibly make me 80 pips. Now that it's moved in my favor, admittedly only 10 pips, but it's getting late in the day, I have moved the stop and I now am only risking 8 pips, 9 pips. So I have reduced my risk by 60, 70%. And this is the first goal. When you get into a trade, the first goal is to try to reduce the risk. Now, it is an art, and you have to be careful that you don't move it too quickly. This pair only moves 40 pips a day, so even a 10 pip move is okay on this pair. I also took the Aussie yen today, and the Aussie yen that I showed you from before, I took it in here, and it fired at 98.70. I had the stop above the 200 EMA, so I had 60 pip stop. I have now moved the stop to 20. So I get 23. So again, I have reduced the risk because this is now 40 odd pips in profit. And realistically now, 40 odd pips, I'm probably going to move this down to here to protect this so I don't get taken out overnight. But step one, always I am trying to reduce the risk. But this was pre-planned, as I've shown you, on Sunday, and I took that trade and that trade today for multiple reasons, as per what I've just been showing you. So back to this. Euro pound I've just shown you, multiple reasons. And again, we start with, is it going up, down, or sideways? And the initial move on this, we would be looking at here. So the real big area, what I was saying to folks, the real preferred area was up here, but here was an interesting area. And that's then when I've gone down to the daily and put the daily trend line on, that's when I got my 5 reasons. This is the CAD. Now, the Canadian dollar, USD, Canadian dollar had massive MACD divergence, but it just kept going up because the MACD divergence really was starting from here and it was going steeply up. So even though it was flagging a potential pullback at the very least, what I said to folks, look, this is off with the fairies. It's off so far up here that I can't take this because there's no way I've got 5 reasons to take the trade. I don't have one reason for anywhere to place the stop. And then the other thing I was saying to folks again is, well, when it keeps going up like this, where's it going to stop? As I've shown you a little earlier. So in the past, you can see here, it spiked through this area in 2020 prior to COVID, and it spiked through this area in 2015. But each time it did, it promptly dropped. And this time it dropped 2,000 pips. And last time it did it, it dropped 2,500 pips, albeit after COVID. So again, when it's got up this high, my thinking is it's probably going to turn back down. But I couldn't short it up here, even though it would have worked today. I couldn't short it because where am I going to put the stop? Do I go here, here, here? I don't have 5 reasons. So for me, I just ignore this for this week. This is a no trade. Now today, part of this move was the dollar move this morning. There was a rumor about Trump watering down the tariffs. And also, there'll be probably a lot of Canadians. I know we have Canadian Brad with us today, cheering because Trudeau's resigned. And if you hadn't heard that earlier, there'll be a lot of folks in Canada who will be glad to see the back of Mr. Trudeau. But we could then see the Canadian dollar gain some strength. And if it starts to get back down here, I start to think about trading it. But for now, too far away. Dollar yen, miles away. Aussie dollar, again, you wouldn't have shorted. I said to folks last week, there was MACD divergence yet again on here as a clue that it was probably going to turn back up. And today was the day it did it. But what I was saying to folks over Christmas, here previously was major support where price had rejected repeatedly going back years. And so for me, I couldn't short it here because I didn't have the 5 reasons. And I wouldn't long it at the bottom because if I'd longed it here during Christmas, because, hey, look, it's where it keeps bouncing, I didn't have 5 reasons, I would have lost. NZD, I'm waiting for a pullback all the way back up here, ideally up here, but into here. And if you notice, the NZD, the AUD, the pound USD, the euro USD, they're all the same pattern. And so if you're not familiar with it already, if you remember when I was looking on here as for reasons, one of the things you have to be careful of is correlation, to referred to here. If you're not familiar with correlation, if you go on to, where is it gone? There's a very good free website called Mataf. Let me find it for you. And again, if you're completely new and you've never seen this before, this is very useful for you. And I'm going to get rid of most of this. You can personalize this, so you're only going to look at the pairs that you're interested in, which makes it a lot easier to look at. And I had done this earlier and it must have crashed. Right. So if you look in here, you can see that the Euro USD on a daily chart goes in the same direction as the British pound 95% of the time. And then NZD 88%, as the AUD 85% of the time, and the Swissy correlated in the opposite direction 94% of the time. These are the same bet. So if you take 3 or 4 of these, or even 2 of these, that are correlated, you are doubling your risk. So correlation is really important as well as, so pay attention to correlation. Now, every day I talk about the news. I normally only pay attention to red flag news, but today was a very slow day with news, so I did have the yellow flag news on as well. And news, as you know, during the day is what makes the Forex markets generally go up and down. And then when Trump comes in, we're going to have fun and games again, because he's going to post things on Truth Social and Twitter at any hour of the day, which can cause some volatility. But it makes it interesting. Tomorrow, big one for the US is ISM. If you're never sure what any of these are, just click on the box and it will explain to you what it means. And anything above 50 is good for the US economy. They're expecting 53.5. And then a Wednesday's FOMC meeting minutes. And then Friday, do not trade. It's never on a Friday. Do not trade NFP. It's a mugs game. It is the best day for the market makers to make money from you. It's a rigged event. You've got 4 lots of news coming out at the same time. It is very dangerous. Leave it well alone. This is a site called Marc to Market. I do read this and recommend it to folks. The gentleman's been in this game for a long, long time, very good analyst, and he explains fundamentally what's going on. And most folks that I teach and the members of Forex Mentor Pro are scared when it comes to fundamentals because they think it's too complicated. But here he explains a trip around the world of finance and Forex rather, and it's a 5-minute read on a morning, and it's excellent, and you really should get in the habit of reading it. So let me put that in the chat box as well as. Right. So I showed you a little earlier. I showed you the lady on Twitter. So using the same system, and I showed you with Ben as well, and I showed you earlier with Phil, using this strategy, I trade or invest in Forex, crypto, and stocks. When it comes to Forex, 70% of what I do is based on technical analysis, and then I filter it with fundamentals. And for example, when we look at the Euro USD is clearly in a downtrend, and the dollar is in an uptrend. But on top of all of that, I live in the Eurozone. It's run by a load of idiots, and there's so much regulation and negativity going on at the moment, and there's so much positivity in the business community in America. There's no way I want to buy the Euro USD, and I wouldn't be at all surprised if we hit parity with this again this year, which is when the euro equals a dollar, 1 for 1. And the same for the pound. Fundamentally, the government got elected on the basis that the other lot were rubbish, and then this new lot are even worse, and they really, really don't understand economics at all. So for me, I do not want to buy the British pound. because I believe fundamentally, to be perfectly frank, the place is screwed for the next few years with this bunch. So when it comes to stocks, though, and crypto, I am 70% fundamental and 30% technical. I use the technical for the entry, and I use the 5 reasons for the entry as well as. So when you look, for example, I look at this every day. I look at the DAX, see what the dollar index is doing. If the dollar is dropping, then generally it means that money is then flowing into stocks and into riskier assets. So the S&P today gapped up. It's rejected at the moment at 6,000. Why? Because major previous resistance, that's where it's rejected before. I look at the NASDAQ. I've started looking at the Russell, because the NASDAQ is held up basically by 7 companies, represent 37% of the makeup of the S&P, I think it is. So I'm looking at the Russell for smaller companies. Look where the Russell is rejected today. This is an alarm I have set. 55 EMA, previous major support and resistance. It would be really good for the economy for the US if the smaller companies started to do well as well. I also look at the US government bonds. This is how much interest the Americans are having to pay other countries and investors to buy American debt. And the more this goes up, and if Trump persists with the tariffs, this is likely to continue to go up. The more this goes up, that means the more of the tax revenue every year collected in America has to go to pay the interest. This is not good for the American economy. Gold is often seen as a safe haven. Made a lot of money from gold in the last 18 months. Usually, you don't make money on gold. And the other thing with gold is to hold physical gold. I know some cultures are really keen on it. The Indian friends of mine in the autumn all go mad on buying gold. Chinese are very keen on gold. Arab world, very keen on gold. But generally, if you've not got much money, gold is for me, it's like the final part of a portfolio. When you've got plenty of money and you're generating income, then you start to put some money into gold. But this year was a very good year for gold. And we were up 30% on gold and 50% on silver. And again, I'm looking for multiple reasons and I need to cough, so just excuse me for a minute. Sorry about that. I had shocking laryngitis just before Christmas. Gariam says, do not stay an idiot. Learn from your mistakes. Move on. Do not repeat. Says, yes, for sure. Right. This is Bitcoin. So in August, I have an investing group. I said to folks in my investing group, I would be a buyer again at 53,000. So from August until November, so what, 3 months, 4 months, Bitcoin shot up 100%. I also, bear in mind, in my investing group, we were buying this at 8 grand originally, but I was also at the start of the year, and this is the session I'm recording tomorrow, when I'm trying to look into my crystal ball and see what I think is coming. Last year, this time, I was saying to folks, I am heavily back into Bitcoin. I also spoke about a month later that I believed that Bitcoin would hit 100 grand, which it has done. And so this was from last year's. Bitcoin the other week was up 150%. Ethereum was only up, I can't remember Ethereum, was it 40%? I actually sold a lot of my Ethereum in the January and converted it into Bitcoin because I thought Bitcoin had the better potential, which was a good one. This one is, I put this out in my Telegram group, the 14th of November. This is H-bar, header up. It was a break of a trend line. It was a break of an EMA. It was early because I normally would wait for these EMAs to break as well. This was to do with Trump getting elected. There are certain cryptos in the US now, anything finance related, that appear to will benefit from Trump being in power. So on the 14th of November, I sent out a message saying I was buying at 0.065 cents. And this went up 500 and odd percent. That was the 7th of November, 2 weeks, 3 weeks. So this is using the same things I've been teaching you today. Break of a trend line, break of an EMA, breakout pullback, but this was 70% fundamental. And then Solana, this time last year, I said to folks that Solana was now my third choice crypto, and that went up 140%. But what I do with folks that I teach is to say, look, when it doubles, take your initial stake out. Always be looking to the left, where might it bounce and where might it stop? And particularly for H-bar, I put this out on Twitter as well. It shot up 300% in 10 days. So I said to folks, look, take the initial stake out and think about taking some profit. When it got up here, please, for crying out loud, if you put $1,000 in and it's now up $5,000, well, take your 1,000 out, take at least 1,000 or two profit out, then keep the balance. That way you start to accumulate a portfolio from, even if you're only starting with very small money. So that's what I do with that as well. XRP was another one. And some of these, for example, this one, I have held this one for 3 years. I did really well out of it initially back in 2008. This was the COVID low, went nuts, made a lot of money, banked the profit. But then the balance, which was bought and paid for, I just left it. Because if I'd left it in the bank, I might have made 3 or 4%. But this just left for 3 years. Suddenly, Trump, American finance, shot up 335%. Okay, I hope you get the picture. I've come to the end of the hour. I'm sorry about that, guys. When I get going, I can talk. Think what else I could show you before I go. I mean, I showed you last time, I look at the news all the time. I get free subscriptions to a lot of this stuff, so I wouldn't necessarily rush to pay for it. Reuters is not bad as a free news site. And then this was Mataf I showed you earlier for correlation. And this was also using correlation. This was a trade I took in November. Remember I showed you earlier, I was talking about the euro and the dollar Swissy. And this was the example of this, where even if I'd only had 5 reasons perhaps to take this trade, the final reason for me was that I think it was this date here. I couldn't take the euro here because I didn't have 5 reasons, but it was a major area of previous support and resistance. So what that post is referring to, that was an added reason to support my theory to go long in here somewhere. So correlation, really important. But the basic message from what I've been showing you this evening is keep it simple. It does not have to be complicated. Do not get distracted buying things with lots of flashing lights and bells and whistles and signals. At the end of the day, you need to understand structure. Is it going up? Is it going down? Is it going sideways? And then you need to look at, well, if this thing drops for multiple reasons, if you want to take a screenshot of this, guys, for multiple reasons, and you need 5 of them at least to take the trade. And as I explained to you earlier, here you can avoid getting it dragged into losing trades rather than longing here or shorting here. Why? Because last time it got down there, it bounced away. And this time it bounced off it. And here it's bounced off it again. So that kind of proves the point for the day. Any questions on what we've covered? Anything? I'm quite happy to sit here a bit longer. If there's anything anybody would like me to show you or to discuss, then just stick it in the chat box. As far as the recording goes, I'm hoping that Tickmill will put the recording out for you guys. And I did say to you I would invite you to the meeting tomorrow. So if you would like to come to my what's normally a members only group, but if you'd like to come to this tomorrow, say I will be having a look in my crystal ball to see what I think is going to happen for the year ahead and where I will be focusing. I will be focusing on crypto again, but I think the altcoins, the smaller ones, are going to be where we make the most profit. I am looking to get into uranium again. Uranium's currently down, but there is increased demand and reduced supply. Russia is a big producer, but obviously because of the sanctions, they're not supposed to be able to supply the market, nor Iran. So uranium is something I'm looking at as well as, but I will put the link. Where's it gone? Can you see the link, guys? Yeah, there you go. It's tomorrow at 11 a.m. UK time, London time. If you can't make it, we will put a recording in our blog. So you will be able to go. And the blog is www.forexmentorpro.com. And I think this is going to break on me now. Yep. Oh, it worked. If you go to the website and you go to the blog, and we'll put it in there later in the week, so you'll be able to have a look at that as well. As I think that's everything. I gave you a download link to David's step-by-step process. Let me put that in the box again. And the other week, I put a free copy of my ebook for you to download as well. Let me see if I can find that. Here we go. I really need to update this, but this is an ebook. It goes through all the basics, talks about EMAs. Nowadays, as just shown you, I only use the 55 and the 200, so ignore things in the book about smaller EMAs. And the password to open the book is cable. You're welcome, Karim. Nice to meet you. Meet you. Pairs with high spreads. So David was saying, quick thoughts on Elliott Wave. I don't use it. I never understand it. I never understand which is 0.1. And even people I know who do it and swear blind by it, they seem to have, well, this is point A, and then later on they have another one, point A. So if you find it beneficial, use it, my friend. Most of the people I have taught over the years come to me with some knowledge, and they might like Bollinger Bands, or they might like Elliott Wave. That's fine. That's fine. Just build on that and go through the process that I've been showing you today. Somebody asked me about spreads. Yeah, spreads on some of the cross pairs can be nasty. Yes, I do pay attention to the spreads. What other questions we've got? How do you select stock for trading, says Hardy? I pick the market that I think is going to do well. So last year, for example, we did really well on mining stocks. And the reason being for that is I explained in the blog in Mentor Pro in 2022 that I thought gold was going to go on a run. And so gold went on a run, which in this year just gone, gold is up. At its peak was up 35%. I've been in gold on and off for 20 years. You go through long periods of time, like 2012 to 2018, it was a terrible investment. But then you go through periods, especially periods of uncertainty and wars and crashes, where gold comes into its own. So gold's up 35%. Silver is up 50%, I think. Let's have a look. 46%. So silver's up 45, 46%. But some of the mining stocks were up over 150, and my best mining stock. So silver was up 65%. 45%, wasn't it? This was my best performing silver mining stock of this year. And while silver was up 45%, this was up 275%. So the reason I get into sectors is for fundamental reasons. And one of the things I have with stocks on all of them, I have the COVID low. Because remember, basic things I've shown you earlier today, if it bounced here last time, it's probably going to do it again. And the reason I have two lines is this was the peak of the drop, but here was a consolidation area as well in 2016. Look at that for spooky. How spooky is that? COVID crash, it bounces the same place. Why? Because humans are looking at it. Algorithms are looking at it. It did it there twice before. It was probably going to do it again. So on that note, I will leave you with it, unless there's any more questions. I think you can get a free copy of TradingView on Teacher. I'm pretty sure you can get a free copy. Very basic. You can only, I've got dozens and dozens of lists, but you can get, I think you can get a free copy still. Some of the brokers as well, you can get, but you have to have quite a decent size account, I think, to be able to get one. Karim says, nice session, and thank you very much. I'm glad that you got something out of the session. Do I provide signals? No, I don't. Saharin. I don't know anybody, to be honest, that makes real money doing this game that does. I used to trade for private clients, and let's say I have 10 clients giving $100,000. So I trade $1 million and I have 10 clients to deal with. For signals to trade the same amount of money, I would need 5,000 clients. I would need 3 full-time support staff. And unfortunately, many people, the few signals I've ever seen that do seem to work for a while, people still screw up because they get in late, they break the rules, and then they blame the signal provider. So no, we do not do that. When it comes to investing, I do have a Telegram group for what I'm buying and selling when it comes to stocks and crypto. The whole number, Wasim, just means for here, the whole number on this stock is $4, $5, $6 on crypto, on Forex rather. The euro, it's 104, 105, 106, 107. That seems to be in the last few years, particularly, price stops there. So, hey, if that's where price wants to stop and it keeps doing it, it's probably going to do it again. And as I've shown you with the Swissy, this one tends to do it all the time. It finally rejected the other day at 91. Today, the low was 90.10. It just tends to stop at the whole number. So, hey, we just go with it. Right, you're welcome, one and all. I hope you enjoyed the session. I hope you got lots out of it. It's a separate website. If you want to email me, I can give you the details for it. Ashley's away, so Marc at... That's the Forex site, so just send me an email. You're welcome, David. Nice to see you again. Right. Thank you one and all for attending. I hope there will be a recording for you shortly. And the next session I will be hosting is with my mentor, Rich Friesen. Rich is a trading psychologist, but he started trading options for the Chicago Board of Exchange in 1983. So he's even older than me. He traded multi-million-dollar accounts for, I think, 10 years for Merrill Lynch. He then traded for his own money. Then he employed traders. Then he also has degrees in NLP, how to retrain your brain, and psychology. And he's a lot of fun, as Richard, as well. And it's really important because the thing that screws most folks up is the psychology when it comes to trading. You can all do this if you can control your emotions and work out mainly it's self-sabotage that screws us all up. It was with me. So anyway, that's for the next time. You don't need to register again. You'll get a reminder nearer the time. It's towards the end of the month. And those of you who are coming tomorrow, I will see you again in the morning at 11:30. You're welcome, David. Thank you very much, one and all. I will catch you later. Good night.